Hey, welcome back to Real Job Optional Freedom. Real estate can be complicated. Let an investor guide you. We are here to demystify the complex nature of real estate by getting you answers from professionals who are in the trenches so you can be the hero of your real freedom story. Welcome to Real Money, a weekly segment of the Real Freedom Podcast, where we ask the most pressing real estate questions. My co host with me again, Kevin Gilbert, and I'm Chris Bell. Today, we're going to talk a little bit about business owners and having a business and getting into real estate and just kind of go down that path. Kevin and I were having an interesting conversation about this, and I mentioned to him something that I saw. Robert Kiyosaki, the author of Rich Dad Poor Dad, he's gone on record and said that literally the reason to have a business is not necessarily to make money or um, you know give back to the community or do these great things or give customer service or do all the things you would think of for business. Have great employees, great customers. Um, his number one reason for having a business was to buy real estate, and thought that was very interesting because as soon as he said it, my thoughts went to you know, one of the biggest um, plays you've ever heard of that's in the franchising world, and everybody initially thinks that they're in one business when they're actually in the other, and that's McDonald's. I don't know if you've seen the McDonald's movie with Ray Kroc. I think it was Michael Douglas played that. I'm not sure, but literally everybody thought they were in the hamburger business and they were selling the best hamburgers and they were all this and a slice of bread. And lo and behold, they were actually a real estate company, and they were buying some of the best real estate in the best corners in North America and the world now. And I looked it up before our show here, Kevin, and McDonald's is the seventh largest real estate holder in the world.
That's a great movie. I really love that movie. I'm blanking on the name right now, but and they don't even really get into the details of the real estate. They really just kind of hint at it and kind of mention that that's how they really blew up, but they didn't get into the details. So you say it's the seventh biggest property owner out there, but I'd love to see the stats on the other six and see if there's a similarity because you know that McDonald's owns the best corners everywhere, right? They talk about real estate is all about location, location, location. You, you know, you, there's not a lot of exits where you can stop at where there isn't a McDonald's, and that they own some real estate at all those locations. That's just here in America. They're all over the world now, right? Owning the property that has value. It's not cornfields in the middle of nowhere. It's right in the middle of everything that's going on throughout the world. So.
Yeah, it's really neat when you look at it and you think about that as a business play. I think as a business owner, say, well, man, like, so should my business own the real estate that we're renting or our office spaces in? And there could definitely be a play for absolutely, it should own the spot that you're renting from, that your business is renting from. But I also think that it goes a step beyond that, and it goes into you might have a business, you may be a plumber, and you're fixing toilets and doing plumbing things, and maybe you don't have an opportunity to own the real estate that your office or your shop is in.
Yeah, I've also seen people let that handicap themselves. It's you're talking earlier about your charity, right? And one of the rules of business you hear on a regular basis is a saying where it's like, uh, "Don't be charitable with your business. Let your business make profits, and then be charitable with your profits." Right? I've seen the same thing with real estate, where somebody gets so stoked on buying a property or they get stuck. Like your business can't grow because, well, this is my building, and I have to fit it into this building, and sometimes they handicap themselves when if you take the emotional value out of real estate and just treat it as a fuel for accomplishing your dreams, you can detach the one from the other. So I've seen that backfire, but it's almost as much about mindset as it is about the fact that you're in this particular building. So, don't let that hold back your business if you need to be in a certain location and you can't buy the property, it doesn't make financial sense to. You know, the other thing about real estate is it comes in small, medium, and large, right? If you need to start small and that's your comfort zone, well, it doesn't have to be the building you're in. I think there's so much opportunity there, but sometimes people cross their wires a little bit.
Yeah, no, you're definitely right, Kevin. I think just personal story of mine. My grandfather owned a building in the closest city that we're in, and they had their engineering firm on several of the floors in that building. And they couldn't expand because they had all of the other floors rented out to long-term tenants. And as the board was looking to expand, uh, the only way for them to expand in any kind of reasonable time frame was they had to move buildings. And this was a building, essentially that my grandfather had invested millions of dollars in. And really it came down to a decision of the board. In order to grow the company, they had to move to another location. And, basically it left him having to either try to re-rent several floors of a commercial building or sell the building. Ultimately, he sold the building. It turned out really well for him, but at the same token, I think, you know, the business and the real estate being tied together like that as the business is trying to grow, maybe handicapped it a little bit. And I've seen that even in our local markets. We've got Chick-fil-A's, and I know some of the owners of the Chick-fil-A's in our local market. And so they own the real estate, or the Chick-fil-A owns the real estate, and they know it's a good location, but they can't get enough people through so they could increase their productivity. So I've literally seen them in several instances tear the entire building down, millions of dollars, and put the building up on the other corner of the lot of the real estate so they could funnel more traffic through the Chick-fil-A parking lot. And all in a matter to try to get more efficient, more productive, make more money with the real estate that they did have. And just interesting concept that you bring up there.
Yeah, but I'm getting away from your point of, you know, Kiyosaki talking about your business should fund real estate, and I think he does a number of good examples about uh, you need to have a goal, right? If your goal, if he, when I think one of his examples is a car. So let's say a Lamborghini. Your goal is to get the Lamborghini, right? Which I personally have no interest in, but you don't go out and spend cash on Lamborghini. What you do is you go out and, but he always talks about the example of buying real estate that goes up in value, whereas a car does not. You buy the real estate, the monthly payments are good enough to cover the payment on the Lamborghini, and then, you know, the real estate goes up in value, the rent goes up in value, and eventually you've paid off the car, right? And he's like, that's how you fuel your dreams, right? So whether you're a business owner and you're looking for retirement and freedom, that cash can fund your freedom. You're looking for a toy, like a Lamborghini or just a nice car. You're like, what you do is you buy the asset that goes up in value and creates that return. And then you take the profits and, use that to fuel your dreams, your charity, your toys, right? So,
Yeah, I think that's a good point, Kevin. You're basically going to use the spread, if you will, between maybe what your mortgage payment is and my taxes, insurance, and what the rental income is, and use that passive income to fund the dreams, if you will. Could fund the retirement and all sorts of great things. Obviously, real estate's not without work, but as a business owner, specifically as a franchise owner, a lot of the franchises have got set periods on them. So the franchisee and the franchisor, they have to come back together at a certain point, 5, 10, 15 years, and they have to renegotiate basically how they're going to continue to operate. And that could be detrimental to the business, and the business owner could decide to sell at that point. And just my thought is always, if it came to that, and either you were selling the business, letting kids your kids take over the business, they were inheriting the business, or you were re-upping with the franchisor. Like there's always that then what? Then what? Because you could do great. You could have an amazing business and sell it for, multiple seven figures, but then what? I think one of the things you miss if if you think essentially that you go all the way through time and you get to this end goal, and let's say you make millions of dollars selling your business, well, what are you going to do with the money? You're going to have to reinvest it to make some type of return so you can live off of the income of the return, or you're just drawing down your income. So a lot of people say, well, I'll buy real estate now. Well, you potentially missed the greatest value of all, and that's time. You could have bought the real estate just 10 years earlier and still had the great business and still sold the great business, and made all that money, but you would have really seen a lot of benefit from the time that was able to go by from buying real estate along the way.
You talk about, another great saying that is well known is the best time to buy real estate was yesterday, right? Um, Back in the day when everybody found the real estate in the newspaper, they would print out the real estate section, right? Well, a friend found one that was like 20 years old, just in his garage, and he's like, every one of these properties I would buy, every single retail price, full price thing, they're all deals now, right? And what has changed other than time has passed, right? So um, that's it's that's one of those things where I'm like excited to get a property into my portfolio, you know, um, even if it's not profitable, if I can just figure out a way to get it, and keep it. I do know that time's on my side, right? That's the way this game goes. So yeah, I'm always looking out there.
Yeah, I think one of the other things that, Kevin, you probably remember this, after the big crash in '07, '08, all you really heard was everybody say, cash flow, cash flow, cash flow. Like, you don't buy rentals unless there's cash flow. Because what happened is in that run up, people were buying properties with negative cash flow. They weren't analyzing deals correctly. And they were basically 100% speculating that appreciation would carry them up another 20, 30, 40, 50 grand. They could sell it, so on and so forth. Um, and and then so kind of everybody ran towards that line of like, don't buy real estate unless it's cash flowing. Um, I love cash flow. That's the reason that I buy real estate. But I also think that there are properties that are basically bought for cash flow, and there are properties that are bought that have cash flow and some appreciation. And then there's certain markets, around the country that pretty much they're never going to cash flow, unless you pay them off or buy them, pay them off with cash. So you're looking at appreciation in some of those what they call cyclical markets. So it's just it's interesting how kind of times have shifted. I think we're in a market now where there's the cash flow is much smaller on the properties that you can buy, but you're seeing inflation and the prices of real estate just go up, 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 up.
Yeah, we've been in a window where it's like the interest rates have climbed drastically in the last 3 months, right? They're at a high of four and some change percent interest every year. And on the one hand, it does create an environment where you're like, okay, the percentage numbers are drastically climbing. And if you're a homeowner and you're buying a $300,000 house, your payment might be as much as $500 more than it was if you were buying the same house a year, if not 2 years ago, right? But we're also still in a low interest environment. We're still seeing rents climb, and you know, I hate making predictions about the future, but I do know that all the houses I've owned for a long time are huge wins. There's a couple that I remember them not being a big win at the time. There was one I bought 2 years ago, and I was real on the fence about it. I'm like, oh, this is tight, but putting it in the portfolio. Well, I mean, it's an interesting 2 years, but there's 100,000 of equity in that property now, and the cash flow has increased because the rent's gone up. So, there's actually, $300 of margin in there now, whereas at the time 2 years ago, it was kind of tight. So it's interesting, like intellectually, you're aware that you're paying principal down, your balance is dropping. There's some tax benefits there, but um, you still want to see it cash flow, right? You still want to see the bank account get bigger, even though there's other value there. You know that you're not getting a great visual representation and over a normal period of time of what your equity is, what your a stock you can look it up every day and you can see the exact dollar. And I hate to mention Zillow or some of those other digital ones, but people are doing that every day where you're starting to like try and track the numbers, even though they're not nearly as real as a sale, right? But you know, the benefits of the real estate, it just they're fantastic, and I think any deal I've had for a number of years, if I go back and track the actual real numbers of both cash flow, tax benefits, and actual appreciation, that I'm always blown away by the results. So
Yeah, I think it's really interesting because a lot of times, you get new investors coming into real estate and, they're looking for that quote unquote deal. And, sometimes
the big fish, they want
yeah,
the big fish.
they wouldn't know a deal if it, landed in their lap a lot of times because they just haven't been in it long enough and looking at and analyzing properties long enough to understand that. But you also get people that say, well, why? People that are in real estate say, well, why in the world would anybody buy like those turnkey properties? Like, why would somebody pay for that? Why wouldn't they just go out and do some marketing, find that deal, buy it, renovate it themselves, hire the contractors? Like, why wouldn't they do it themselves? And I think,
Yeah, they're getting mixed up. So all of us as human beings have that problem of like we see the world through our own lens, right? If you know how to swing a hammer, you're like, why doesn't everybody go and save a couple dollars and swing a hammer? You know, but if you're a doctor or you're running, we were talking about franchise, you're running your franchise, time is of the essence, right? Like your time has value. You're not looking for a new job. You're looking for an investment for your income. And, you know, I think the numbers are different for a person who's making it a living and trying to eat from that money. They need it now, right? But if you're looking for an investment and you look at these numbers over a 6 7 year period, over a 10 year period, over a longer period, then I got to eat in the next 3 months. The numbers are huge and they're there. And I saw years ago this example, might have been from Dave Ramsey, but I'm not going to swear to that. But there was an example of uh, Joe and Bob, right? And um, Joe is a stock trader, and he's buying and he's selling, he's buying and he's selling, and they go on the averages of what you know the day traders, the amateur day traders are making, and he's getting his butt kicked, right? And then they have the other guy as an example, as somebody who buys at the worst time. He buys at the highest point in the market every year and just leaves it in there, right? So, the market's at an all-time high, that's when he buys. And we come back next year, the market's at an all-time high and he buys. And we come back next year and the market's at all-time buy and he highs. And we look down the road 20 years and that guy has crushed it, because the time frame on a 20-year chart, the highest point in the market 20 years ago is still a fantastic return because he was in it for the long term, right? And you can play with that data and it's a blast to look at because it's amazing how time really does, it pays dividends.
yeah, I think that just reminds me, like when you talk about the stock market, I'm just reminded about how percentages are manipulated, and this example always comes to mind for me, and I've just got to share it. But it was if you had $100 and you invested it and it went up 100%, how much would that be?
That'd be
200.
$200. Yep.
That's right. And if you lost 50% of your $200, you would be at 100.
$50.
Or you'd
Yeah.
be at
No,
100.
your 200 goes to 100. Yeah.
Yep. So, but if you looked at that over a 2-year average, the average would be that you made 25%. And in actuality, you were at 100 where you started, but the numbers say you made 25%. So it always reminds me of how numbers and statistics can be manipulated for people who are maybe not as math aware, that like some of these averages and things that people are pitching and sharing, and here's your big prospectus, um, it could be skewed in their favor. Let's just say that.
They make you take a lot of classes in college, and some of the classes don't really make a lot of sense to you at the time, right? It feels like, what am I going to learn from underwater basket weaving? Why am I taking the class? Well, for me, one of those classes was statistics. I was kind of curious, but it was just idle curiosity, and um, I really enjoyed statistics one and statistics 102, I think it was. Just the entry level stuff, right? So there's some math. Well, here we are 20 years later. I don't remember any of the math. But what I remember about statistics is how you can tell whatever story you want with the results, right? You know, and you just got to remember that when somebody else is showing you data, right? When you're looking it up yourself, it's different than when you're staring at the raw data and somebody else is pitching you something, right? So, yeah.
Yeah. And I think just to kind of bring this back to, what we were talking about a little bit here was, um, you know, a turnkey rental. If somebody's buying a turnkey rental, typically they're paying almost retail, maybe not exactly retail, but what they're getting is they're getting a product. Typically, it depends on who the turnkey provider is or what have you, but typically they're getting a property that they know that the HVAC has been replaced. They know there's a new roof, new windows. It's
No deferred maintenance.
right. And so what ends up happening when you look at that over time, their capex expenses, they don't have additional outlays of cost. And so that capex cost is pretty significant. And as time goes on and materials and supply chains get tighter and costs go up and labor goes up, like that stuff costs a lot more money down the road. I don't see it going down anytime soon, that's for certain. And so there's big benefits to having that stuff done, and not to mention the time involved in the management and the oversight of somebody overseeing that project. Like Kevin, we've got a mutual friend. They flip a lot of houses, and he was telling me a couple of weeks ago that they had some they know ask them to basically use their crew and renovate a property. So he took me over and he's showing me the property. They're renovating. They didn't even buy it to flip it. They're basically helping somebody out, using their crew to renovate the property. And he's showing me it all, and he's telling me how many times he's having to go out to the property and how they've had to go to Home Depot and get materials, and on and on and on and on and on. I said, so what what are you making on this? What are you making? He was like, I think it was 5 or 10 grand. It was significantly less than I thought it should be. For like they literally basically built a brand new house for this person and supplied all the vendors. Everybody went and got the materials, oversaw all the work, did everything, and I was like, oh my gosh, you
I need
should
to
be
ask him for
making.
some favors.
Yeah, I'm like you should never do this again unless you're going to make 15 or 20 grand. Like never. And he just laughed, and I'm like, man, that's way too much going on for 5 or 10 grand. So there's real value in those guys who are doing
Well,
turnkey rentals.
the other side of that is, deferred maintenance is a problem when you pick up some of these properties. But you also think about it as like the time value of that money. Like if I get it done now, um, I'm getting everything done at once. It's you know if you purchase the property already renovated, like I'm not dealing with that with a long time, right? And if one thing breaks while somebody's living in the property, it's a lot more effort, it's a lot more work, and depending on like the problem and having people in there, a lot more cost, right? As an example, that's me and my wife are kind of half planning to renovate a kitchen, and I'm like, we're not going to live here while it's being renovated. You just that's a, that's a recipe for disaster, right? And the same is true for rentals. Like if you can just knock all that out and not deal with it for a decade, there's all kinds of benefits to that. So I get that, especially if your time's precious to you, right? So a guy who's in real estate full time versus somebody who's an investor, it's like, well, I'll pay a little bit to not have to dedicate the time, energy, or effort that's involved in that. And over the next decade, you're still going to see a significant return. So,
Yeah, just tip for you guys, if you're buying turnkey rentals or you're buying investment properties out there and those properties were built in the 40s, 50s, 60s, um, the main sewer line from the house to the city tap should probably be replaced before you rent it. It's a lot less expensive to do it before a tenant's in there, before it gets clogged up, backed up, overflows in the property, and causes an
on
insurance
Christmas
claim
Eve, right? Christmas Eve.
on
Yeah.
Christmas Eve. Yep, we had one of those. And here's another pro tip for you guys. You want to make sure that your insurance, your landlord insurance, has got black water backup coverage. So in the event black water is basically sewage, backs up into the property, it's typically a pretty cheap rider to add to any policy that you guys have got that. So when it happens, you can get paid any displaced rent that you would have collected. The repairs can be fixed, so on and so forth. If you don't have black, that extra little rider on there, a lot of times they won't cover it, and that's a mess. So
So I need to explain that. I can't just drop in Christmas Eve and leave it at that. It's something I can laugh at now, but years and years ago, Chris and I uh, had a property that just the you're like, it's Christmas break, it's Christmas presents. There's a family in that property, right? Uh, a husband, wife, and a kid. I think there was one kid. Anyways, there's presents, there's a tree, there's all kinds of stuff, and they're trying to stuff sheets down the toilet to keep this from coming into the house. And at the time, it was not funny, but now years later, I can like kind of chuckle about it. But this is why you deal with this stuff before it's an emergency, right? So.
yep, absolutely, guys. You know, it's never a dull day on the management side or the investment side. And we hope you guys were able to get something great from the podcast today. And tune in next time. We've got another great show coming up for you, and we appreciate you all being here. Take care.